Welcome, everyone. It is Angelo Robles, a rare, maybe I'll do them more often, Saturday morning, at least Eastern time here in the US at the moment. Live, excited to be on live. Just got lots going on, got lots of energy, and have really a great guest for you today. So, how about a self made investor joins me to discuss how to be a successful investor? And as a bonus, of course, we're both NFL fans, and some of you are too. But even if you're not, that's not going to matter. How about Swift, of course, Taylor, and Travis Kelce? Good for business. We're going to put a little bit of a business angle on it. And we're probably going to talk, given that it's Saturday football day as well, a little bit about Prime. So it's going to be an interesting show. And on that note, let's kick it off.
When you're lost, you're all alone, all your hopes and dreams, they seem so far and you're wondering what went wrong. I'll be the one who's there for you, a shoulder for you to cry on, reach out your hand, I'll give you love. There comes a time when everyone must choose a way. Believe me, where to say love is genuine for you. Everything you do is so amazing. You drive me crazy. I want all the world to see. Everything to me is so amazing. You drive me crazy.
So I think that should be like how about our new opening song by the multi-talented and the one and only, our special guest today, from nothing, like I said in my write-up, from the hood, and being a very successful investor and entrepreneur. Everyone, welcome my friend, JJ Sowers. JJ,
Hey.
great to have you here, buddy.
Yeah, thanks for having me. How you doing? So
It's
yeah,
been a while. Now, I speak to JJ regularly, but when I say been a while, he was I would say, a somewhat regular on my at Family Office YouTube platform. But the last time I had him on, I believe, was mid-January, and we were coming off a horrific year, 2022, in investing, where Mr. Sowers, a very accomplished investor, and we'll get to some of that shortly, admitted, and we always honestly, like Angelo, 2022, I believe, was my worst year ever. And first of all, it's rare to have someone who's an actual, especially coming from nothing, a self-made investor, to come on a show and has nothing to offer. No, he's not raising a fund. No, he has no interest in co-investing. No, he has no interest in even really giving out his contact information and sending him deals. Zero. I mean, he really is here to some degree, a little bit of our friendship and a little bit of mutual respect that we've earned over the years. And simply, I asked him, there really is nothing in it for him, but we do want to provide value back to you. So, JJ, I think because I laid out a pretty interesting open there, and you're also rocking music, and we have so much to talk about. And this will be a little bit like my older school YouTube videos that many of you are familiar with, in old school like this summer and the prior 3 or 4 years, kind of longer form. So I'm going to bounce around all over the place. We're going to make it a little bit fun, but we're going to talk about some serious stuff as well. But I think from JJ's perspective, being adopted at a very young age and growing up with a family literally in the hood in Maryland, we'll talk a little bit about that. And, graduating high school, and I believe, going to community college and not even completing a bachelor's, but maybe an associate's, to be able to accomplish and to be able to think for yourself and do what you've done, I think is truly amazing. We spoke a little bit about some of that in one of the prior interviews that I did with you maybe a year to a year and a half ago. But before we get to that and some of that, my audience, well, maybe not as much my live audience on investing conversations, but my audience in general does like to know that I like to go long form and bounce around. Why don't we ask really a pretty hard hitting question on the economy and investing right now? What if, that's the key word, what if the biggest mega bubble of all time hasn't even topped yet? meaning we think that 2022, terrible year, yada, yada. But in reality, it's been a great run for decades. It's been a bordering on tremendous run since 2008. We're having a good year this year, even when the metrics kind of don't make a lot of sense and things are so overvalued. Wow, we might be in for a world of hurt. What do you think, JJ?
So I personally think that the biggest bubble, the mother of all bubbles, has not burst yet. And have you ever noticed how, like, it seems like these bubbles are all kind of intertwined throughout history, maybe even through, I don't know, maybe even hundreds of years, but at least decades. And it seems like every bubble seems like bigger than the last. But I always wonder, what if it's just one gigantic bubble that might have even started, I don't know, in 1776 and has ran for centuries? And it's the dollar bubble. And what happens when that bursts? And then what does it look like? How do you defend yourself? Does anybody really know? Because there's so many unintended consequences. You could get something right and then say, okay, being this, this, and this. But in times of panic, all correlations go to one. And I just wonder, something like the dollar collapsing, and if unfortunately, if we were ever to lose reserve currency status, what would that look like? Would there be hyperinflation? Because you know how everyone says, oh, this money printing hyperinflation. It's never happened. So I kind of asked myself, what the heck would cause that? Well, what if the dollar lost reserve currency status and then fell in value? Well, in theory, if the dollar falls, the nominal dollar value of assets could or should rise. Maybe they do. But if our purchasing power gets destroyed more than the nominal rise of the assets, even people worth hundreds of millions and potentially even billions, depending on their assets, could actually be destroyed, because you would lose so much purchasing power. And a lot of really wealthy individuals do have a high overhead. That's why I always try to keep all my overhead and everything really, really, really low, relative. That way, if anything ever happens, I can still just continue to operate my normal lifestyle. But I know a lot of people who get out of hand with their lifestyle, and man, if that ever happens, they are in deep, deep trouble.
I have a quote in one of my master classes from one of my billionaire relationships, and he reminds me, and his family's been global for hundreds of years. I think you would agree with his comment. Given enough time, and that time may be hundreds of years, given enough time, everything will go to zero. I mean, name the greatest company from 200 years ago, 300 years ago. I could argue even from 25 years ago. Things are changing. They may not happen rapidly, although broadly in the grand landscape of the earth and civil society, it's a boom. It's like a quick. But do you generally agree with that comment that given enough time, everything goes to zero?
For the most part, yes, because even look at like the S&P and the Dow and how they changed the companies. I mean, if you look at the Dow when it first formed back in the railroad days or whenever it was, I don't know exactly when it formed, it's not the same companies now, and some companies keep getting added and removed out here. So, yeah, over time, I mean, it definitely changes because industries change, cycles change. So it's very rare for a company to even last 100 years. Like, how in the news you'll hear this company was around 100 years and went bankrupt, and everyone's like horrified. I mean, it was its time. It's a miracle it made it that long.
Well, I'm going to talk a little bit out of both sides of my mouth. The great Sir John Templeton, basically said, we hear too often, this time things are different. But he estimated about 20% of the time, actually, things are really different. Could I make the argument that given the advent of AI, and we'll get to a lot of that a little bit deeper into our quote unquote, our broadcast, that I know we overuse that term. Well, this time it's different, and really it's not. But the accelerated pace of this time it's different may actually be more true. Now, the both sides out of my mouth is the legendary, of course, Benjamin Graham, can't stop reminding himself that he always said, it is never different, that it rhymes, I guess you could say, at minimum, quote unquote, history. So what's your perspective relative to the overused phrase, or this time, is it really true? This time things are different.
So I agree that history kind of rhymes, like the 100-year cycles. Like it's kind of weird about the Spanish flu, and then almost 100 years later was COVID. I mean, maybe not exactly 100 years, because when you look it up, I wasn't around back then. that when it started, it varies when you look it up, but it's approximately 100 years. So that kind of rhymes, but it's not 100% repeating. And I think a lot of things are metaphors. So I think like when Sir John Templeton says 20% of the time, this time it's different, because everyone says, oh, this time it's different. And like you said, it's almost never different, because only the Sith speaks in absolutes, as I learned in Star Wars. But there is some differences. And maybe I think what he's saying is like 20% of the time, it's different in a way that's not expected. Because I always feel like when everyone expects something or everyone knows something, it's generally wrong. Now, sometimes the crowd is right, and for some period of time, but for the most part, when everybody knows something, it's generally wrong, because everybody knows to buy a certain company's stock or any kind of investment. Well, then who's the next buyer? Who's going to buy it from you once everybody has it? I mean, so it just defies common sense when everybody knows something. Because a lot of times, too, when they say everybody knows something and then everyone doesn't, it goes up, that's because there was a lot of doubters, so there were still buyers out there. Or within the market infrastructure, people were short the company, so they were forced to buy it back, but there was still a buyer.
And we're getting some interesting comments in the live. That's why it's great to do a live by Luke. Really good point. Yellowstone Logistics Shipping Company, probably one of the largest companies during its time, one day, quote unquote, 30,000 employees and filing for bankruptcy. I mean, that's almost like an everyday occurrence for the lack of adaptability. New competitors come into the market, it becomes more global, advent of technology, generational issues within the family, stale board. I mean, I don't know where to stop. I basically could go on and on. So it's very, very hard to sustain generation after generation after generation for a family, but also a company as well. Arguably, they could have total and complete dominance of a market. They could buy out competitors. They could eliminate, you read between the words, quote unquote, competitors in a variety of different ways. But again, I don't want to get too much on a tangent there. Okay, so last year, to your admittance, was probably the worst year you had as a successful private investor. This year, the markets are doing well, even though we have what I could argue is still high, and the government technically agrees because it's above 2% inflation. We have interest rates rising, although a pause, just last week, and now we're September of 2023. But the markets appear to be kind of ignoring some of that, at least in the stock markets. The valuations are so high, and I think that relates to the comment that I said earlier. It keeps on building up and building up and building up. Like, this may get really ugly, but when? When is it going to get really ugly?
Well, no, but the honest answer is nobody really knows when. I mean, I have all these people, I call them talking heads or prognosticators or Nostradamuses, modern day Nostradamuses, telling you like it's going to happen this day, that day, or it's going to happen soon. Well, if they keep saying it's going to happen soon, one day they're going to be right, because eventually it's going to happen, and they're going to say, see, I was right, even though for I don't know, some of them have been telling us this now for 13 years and we're still waiting. And then they claim they were right, last year, but it didn't really totally collapse. It was just a correction.
Oh, come on, Sowers. Give us some names. Stop beating around the bush. Who are these prognosticators, these economists? Who are they?
Oh, there's probably hundreds of them out there. I know. But I always say to myself that it is dangerous to try to make predictions, because I don't really do a lot of interviews or even talking in public anymore. And people always want to ask you that in public. And I always say it's dangerous. And sometimes they goat you in. I think you goaded me into making some predictions before. And I even said, this is dangerous. I'm making these predictions because they're probably going to be wrong. They're going to age very badly. Because
I guarantee you, audience, I will go, JJ, into making some prognostications, some predictions today. To give the audience, now that we opened up with somewhat of a bombastic question, we're still in an all-time bubble, perhaps the greatest in history. And we may be looking at somewhere between, I don't know, a year to 4 years from now, where this ends really, really bad. Look at our deficit. Look at the challenges that we have in this country and around the world. Look at the slowing GDP, population eventually in a decade or two starting to decline, grave challenges, energy issues. I mean, where do I stop? The threat of nuclear war always, it feels like, around the corner. There's lots and lots of problems out there, and there probably is very limited solutions. Even the work that I do in sovereign risk and disaster preparedness for the super rich, etc. That is a complex intersection. And even then, I would say some of the solutions are relatively you have very little control over. But that does lead me to a point that I think follows a philosophy that you and billionaires that I've interviewed, like Michael Saylor, have said on my podcast. And he went to MIT. But you told me this before he did. Maybe the number one trait that we could have is the capability of thinking for ourselves.
Yeah, I think that's really important. And it's interesting, too, because, people who think for yourself and people are like, well, I think for myself and all this. But, I think I might even said this on your podcast before, that being a contrarian isn't doing what the opposite of the crowd does just for the sake of doing what the opposite of the crowd is. It's actually the ability to think for yourself and actually think for yourself. So, then you get into what does that really mean? Because, your perspectives, I guess, are shaped a little bit by your experiences. But I think you have to have the ability really to be a true contrarian when you're thinking for yourself. You form your own opinion or thesis, but then you have to think, okay, what could go wrong? What could cause me even to change my mind? And what's the opposite take on this? Now, sometimes there are things where people aren't really thinking about, so there isn't really an opposite take. So you have to kind of make up your own opposite take. And I think we even discussed this about how I think the energy bull market that quietly just keeps happening over decades will end.
Yeah, I mean, there's lots there that we could kind of jump into. Strange that you mentioned the word energy, because I'm not going to ask the question that people think I'm going to ask, which is coming up on prognostications for oil and all that. But, so Mr. Sowers, you're known for thinking for yourself. You're someone who took relatively a pretty modest job with, again, a humble background growing up in the hood and lessons learned from that. And we'll dive in and out of that a little bit throughout our interview today. But you were able to make some really tactical, highly concentrated, let's go with the word, I was going to use the word bets, although in some ways, yeah, it is. But, you've been able to be active. One of them was an energy drink. And I know you don't like to overly openly talk about it too much, but come on, I'm your bro. So like a little bit, give the audience a little bit of color to the great investment that you had in Monster energy drinks.
So back then, it was actually called Hanson Natural. And a lot of it's luck, too, because this was in like 93. And it took like a decade, really, for the stock to do anything. And they ended up changing their symbol to MNST for Monster. But it took forever. But it wasn't like now, though, because to be honest, if it was like now, you could look on your phone, you could see the prices every day. Back then, you got a statement in the mail literally like every quarter, and it was usually a week or two after the end of the quarter sometimes, I think. I mean, I don't know if I'm remembering correctly. It was so many decades ago, but you definitely didn't just go on a phone. They mailed you something, so you couldn't look at the prices. And I think that actually influences people to sell when they should.
Yes,
like, oh, exactly. It's not doing anything, I should sell. Or when it's going up a lot, they say I should sell. So the technology, I always say, is a tool, but it can help or hinder depending on how one uses it, like anything else. As you mentioned the AI earlier. But a lot of it was luck, being in the right place at the right time. But the one thing I did have was a thesis. My thesis were that energy drinks are the cigarettes of my generation. I actually still kind of have that thesis. And, everybody knew of, I think it was something called Red Bull or something. And but you couldn't invest in that. And I noticed that the Hanson Natural can was the same size. It was that real slim. It was real ugly looking can, too. And I was like, all right, I didn't know any better. Well, I didn't know all that. Just because it's an energy drink, it's probably going to fail. It's not just because Red Bull is an energy drink doesn't mean anything. I was naive. I was a teenager. I was 19 because I'd always wanted to invest in stocks, but I couldn't because my parents didn't understand what a uniform miner's account was. And I used to actually pick up pennies off the ground, literally off the ground. And how I talk about forming habits. To this day, I still do it. People laugh at me. But it's the habits you form in your life that create your discipline and your psychology. Mm-hmm. And, I used to save those up, get 25, 30 cents, buy packs of swimsuit cards and stuff, break the pack apart and sell those. And I didn't know that was like your profit, your break even, and like a business, and almost like trading. I used to call it buying and selling. And then that money would accumulate, and I would just save it up. And that's how I had actually saved up money through probably decades, because I started this when I was a real little kid, like 5, 6 years old, just picking these pennies up off the ground and doing this. So, by the time I was a teenager, I had added up to a little bit of money where I was able to make some bets like this. But a lot of it was luck, but I think a lot of it, too, is really not ever thinking it. And I had my thesis, and I thought, well, what could really go wrong with this? And I said, I don't know. This is the cigarettes of my generation. At that time, I said nothing because they didn't have all these lawsuits, which is a bad thing to say nothing because something can always go wrong. But nowadays, like at the time, it was Philip Morris, which I guess is now Altria. and they've split apart in different companies. They have all these lawsuits, and people say cigarettes are harmful, which I believe they are. But a lot of people are saying that energy drinks are harmful too. So that's my one bad habit, those and eating gummy bears. So eventually, I know there was a few lawsuits against them, but maybe eventually there is mass lawsuits against the energy drink companies, and that's how it comes to an end. But it seems like we're just years and years and years away from it. And another thing too is the energy drink companies have pricing power. That I think that actually means something during this inflation or whatever you want to call it right now, because it is inflation, but I believe inflation is very personal. Because your inflation rate might not be the same as mine. That's why I always laugh when they say, come on TV and say inflation was X number. Really?
I mean, you look at the energy drink, from a company perspective, it's what, like carbonated water, sugar, caffeine, and some. In other words, it's really, really, really low cost to produce, and the markup, even at whatever retail, I don't know, $5, $6, $7 is tremendous relative to going from making it wholesale into retail. It's a very, very good markup company. You would think that it would be easy to replicate. And there are competitors, maybe if you want to briefly talk about one that other people would be familiar with, like Celsius.
So there are competitors, but I don't know it's just as easy to replicate as everybody says. Because one thing I did learn as a child was reading about the margin of safety. And I did ask myself, so what's the one thing I did ask myself, well, what the heck's the margin of safety? Because it's basically like a soda. And I said, well, there is like the Monster Blend, which wasn't called Monster Blend at the time, as you see now in the can. But I said, there's ingredients in there that they're probably not revealing, because I just thought common sense growing up in the hood, even though they say the ingredients on there, there's got to be some secrets in there that makes one a little different from the other that they don't tell everyone. And also, too, just the fact of getting in the stores and getting distribution and getting visibility, which I didn't know was, you had to pay for end caps at the time. I didn't know all that back then, but I just kind of subconsciously realized, hey, the visibility is some kind of moat. And companies like Celsius, that's another great energy drink too. And I like that energy drink. And here's the funny thing I liked about that. See, people laugh at these things because I think people kind of like overcomplicate things. I said, when Celsius was low, I said, man, this really could be something. And kind of I believe in omens, and people laugh at this, but I said, the can is really slim and the same type of can almost as the one Hansen was. I said, so this is like an omen. And the price was really low, and it just had a lot of the elements of Hansen back in the day, because Hansen had gotten taken over by, I think it was the Rodney Sachs group. Mm-hmm. And it seemed like Celsius was having issues, and they were having kind of like restructuring types of things, but maybe not officially a restructuring. And I think they were moving from OTC to the main stock exchanges. So I said, this is not exactly the same, but it's history repeating in a rhyming way. So to me, all that was an omen. Now, of course, it could have just went bankrupt, or all hell could have broke loose or whatever. But to me, that was kind of like a signal. And you always believe in risk reward too. So you put in a smaller bet, if you lose the whole thing, as long as it's not ruinous, hey, that's great. But what if it is kind of similar to Monster Beverage? The upside could be enormous.
Of course it could be. And just to keep things moving a little bit, JJ was very, very successful. Like he said, wasn't overnight in Monster, has been very active and very successful in psychedelics. I don't know if we're going to have enough time to dive into that. And for many of you that have seen him on my @Family Office YouTube platform, especially back a year, 2, 3 years ago, was an extremely knowledgeable and wickedly successful investor in Web3, blockchain, crypto, and NFTs. We're going to go into a little bit of that towards the end, but it's only going to be really a small percentage broadly of what we're going to talk about. And again, we are going to bounce around and go back and forth a lot. I guess if I had to ask you a specific question, like you said, last year was your worst year. Let's broadly go with the word of all time. What lesson did you learn, and what would you do differently? Hindsight's 2020.
Well, I think a big reason that happened was confirmation bias, because I do remember, I believe it was November of 21. That might, I'm not exactly sure when the Fed actually started raising rates again, but I do remember like they kept saying they were going to, and I was like, oh, this is like the boy who cried wolf. These guys ain't going to do it. And I said, if they do it, they're only going to do it one time, and they may never do it again, and they might even reverse it right away. Well, no, they were serious. They did it, then they did it again. I don't know how many times they've done it now, but they kept doing it, and they told us they kept doing it, and there were a lot of signals that they really meant it. But I kind of ignored those, those omens since I used omens earlier. So I should have paid more attention, because all assets are basically the denominator or valued, off of the 10-year treasury bond. And, when that rate goes from basically zero to, I don't know what we're at now, but I guess we're around 5% or so. And it might go a lot. It might go higher. Who knows? That I should have woke up and realized a lot of these assets, are they truly worth what they're valued at or selling at now? And it was common sense, no, because a lot of it's kind of like an embedded Ponzi scheme, really, that I believe started just the day we came off of the gold standard.
That is 100% true. I don't know if we have a time to do a super deep dive in that, but the reality is a lot of things. Well, yeah, coming off the gold standard in 71, with the stock market broadly created what some come out of a so-called embedded Ponzi scheme is they get big enough, they get enough scale where they become, let's broadly go with the word, legit. And again, Ponzi scheme is probably, or embedded Ponzi scheme, a little bit of a strong word, maybe bordering a little bit more on kind of a quasi pyramid. But yeah, like a lot of this is built on what you just noted, low interest rates, and to some degree, it looks like a mirage. It would leave me very, very concerned. So the Fed, I guess on Wednesday, the 21st here in September, paused. So paused in terms of the interest rates. But I think there's something psychological that we need to remember. What really matters is public expectations, relative to expectations, interest rates pausing, the threat that inflation is still too high, which broadly it is, and raising interest rates more. But again, stocks are going up when historically a rising interest rate environment is kind of really not the friend of public companies.
So I wonder how true that really is, because we keep reading that and we are always hearing it. But if someone had the data to look back, I think it was in the 90s, wasn't it right after the long-term capital management, I believe, had burst? And didn't they start to raise rates at one time? And then we had the NASDAQ bubble right after. I might have my dates right because I was, a teenager or whatever at the time, and I wasn't really into it, and I've read different things. But I wonder, because I think the speed of things really matters. So if the interest rates would have rose like to 10% or 12% or 20% real quick, yeah, that would be a world of pain. Everyone would get wrecked. But when they're slowly raising, yes, when they start off with zero, everything does correct or reprice. But I do wonder that when everyone starts pricing it in, and we talk about relative to expectations, do things level off at some point? Because remember, too, the mechanics of the market and the infrastructure, money managers, a lot of them have to deploy some money to earn their fees in certain types of sectors. So I do wonder if when things level off to a point, everyone says, okay, the expectation's here. The price was here. Now it's here. And somebody has to go first. So somebody starts buying. And then people see there's buying and others step in. So I do wonder throughout history if the interest rates, they first started rising, maybe there was a correction. But I wonder if after maybe 6 months to a year of the rising, did equities actually level off and start to go slowly back up? I do wonder. I don't know the answer to that. I have looked this up before because I tried to look it up when interest rates started rising, and I got all kinds of different answers. And the majority of the ones on the internet were, raising interest rates, stocks crash. And you know what happens when everybody knows something? It's generally wrong.
Yeah, yes, it is. I know you're big on the philosophy of a lot of things really relate to. And again, I like how you like to keep it simple. I've interviewed Adam Robinson, the legendary thinker and hedge fund advisor, and been a guest on Tim Ferriss many times.
I like his hats.
And he did have a cool hat. Oh my God, I've interviewed Adam probably 4 times, each time probably over 2 hours. They've been long. But he's looking at when he's making decisions. You're very similar. Now, your metrics are actually, to some degree, very different than his. And he would say, that's fine. As long as you have a core 1 or 2 things that you look at, then you form a thesis and make a decision. And then maybe you back that up with a little bit of deeper behind the scenes thinking. But this goes to the whole thing. We know the statistic. VCs that do more research on the entrepreneurs end up making worse decisions on them. So could we overanalyze? Why do we make that mistakes being logical, right-brained or left-brain, I'm sorry, thinkers so much.
Yeah, so I think in anything, whether it be startups, but especially startups, but in anything really in life, a million things could go wrong anytime. But the thing is, I always ask, what is the one what if it goes right, that can have an enormous asymmetric return in anything, even public companies. So a lot of people talk about what startups doing now, but there's a lot of companies on the TSX and the NEO that are kind of quasi startups, or even when they had the SPAC boom that didn't end well for most. But some of these companies, I would always ask, well, what's the one what if it could go right? And if that goes right, how big could this upside be? And what do I feel the probability of that may be? And then if you make a bet, as long as you don't bet the entire house on it, it's not relevant. If you're wrong, you're wrong. You just make another one. And just at a probability, if you make enough of these bets, eventually you should be right. If you use a discipline and you manage your bankroll correctly, and you don't just start willy-nilly changing your mind the next day for no reason just because the price of the asset went down. Or if it went up a whole lot in one day, saying, oh, I was right. Thanks for the memories. Unless that was your thesis, that the pop is only going to be 100%. And as soon as that happens, that's a ridiculous price. Then I should get rid of it. Because when the price of something is truly something you no longer understand to the upside, maybe you should think about getting rid of it. Same thing about the downside. If it's a price you no longer understand the downside, maybe you might consider purchasing it. Or even if you own it and nothing's really changed, then maybe you should buy more. But then that's when you might actually do a little bit of, analysis and say, why is it going down this much? Was I just wrong? Am I the fool? Which can happen to everybody many times. Everyone can make mistakes. Or is the market really mispricing this asset? Or was it something fundamental where somebody got a margin call who had a really big holding in the stock and they were forced to sell? Nothing to do with the company, nothing to do with the fundamentals, nothing to do with my thesis. See, that's why I talk about contrarian too. People, I don't think these things through. They see one thing, they hear a bunch of noise, and they say, oh my God. And they don't control their emotions, and they totally abandon their thesis.
I mean, I think you're the one who told me. I don't want to mess it up, so you'll correct me as I'm saying it. Relative to the whole thing about being contrarian, it's something to the effect of that. I believe it was you who said, you want to kind of pounce upon the mistakes of others that now have to liquidate, that now have to sell. It's the liquidity issue. It's maybe being overly concentrated, although in theory, that is the way to make greater capital and greater money, not having enough dry powder. But you want to capitalize effectively on the stupid mistakes of others.
Yes. So I do run around saying that. I run around saying capitalizing on stupidity. But a lot of times with stupidity, I don't actually mean as a personal thing against someone. It could even be the stupidity of a market infrastructure or forced margin calls or things of that nature. So just stupidity of things, because there's a lot of things as far as rules and the way things are set up that could be considered stupid. So when something like that happened, to be able to capitalize on that, yes. Because I believe that, like you talked about, being concentrated is how somebody becomes, if you want to call it rich or wealthy, because that's also what defines rich. Is it $1 billion? Is it $10 billion? Is it $100 billion? As time goes
I like
on,
how you think big. Most people thought you were going to say 10 million, 30 million, 50 million. No.
Well, I have a whole theory about, well, first of all, we shouldn't go into it because people get upset, but those numbers are not good. They're not a lot of money. So really, even I think in the family office,
30, 50 million is not a lot of money.
So even in I think some family office article that you had showed me said that the minimum was $750 million, and that was lower than I thought. I thought the minimum was somewhere between $1 to $3 billion, and I keep raising it. and you notice the Forbes 400. I think to be on there, you probably have to have it. I don't know what it is because I haven't looked, but at least a couple of billion, maybe even.
Well, it might have lowered after parts of last year, but I think that comment you bring up is right. If nothing else, it's aim for the stars and maybe settle for the moon. I mean, I've been talking about for years to have a little bit of a level of escape velocity from the system, minimal of $30 million. But this is all going to be relative. What do you want to do? You want to build a $500 million yacht. You want to, and we're going to talk a little bit about this with the difference between Swift and Kelce and, certain things she could do that he can't do. That's coming up. I promise. We're not going to wait to the end. They'll come up ballpark about midway through. But then if the dollar denominated assets and what you describe as a massive bubble, the dollar losing, if not total reserve currency status, part of its power. Like that third, and inflation going haywire, your 30 million may feel like $100,000. Like, and yeah, I know the average public is going to hear our comments on this and like, oh my God, these family office guys are like so snooty. Like, it's just a matter of survival. It's an opportunity to be great. It's an opportunity to have financial freedom, not just for you, but for generations, and provide value and have fluidity and optionality, including where you live. There's lots of problems out there. And yes, let's not beat around the bush. Money provides a level of capability to address not only much of Maslow's hierarchy, but give you some level of freedom and optionality.
Well, it's about resources, really. I mean, resources are everything.
Yes. So I like how you think big, that family offices, oh my God, you shouldn't even think of one unless you got $1 billion. That's probably not enough, like 2 or 3 billion. Now, I don't necessarily agree with that, but that's a good philosophy to have. And I know some will look at that as, oh, the ultimate capitalist, never having enough, etc. But these are also people that are often building great companies, changing society, hopefully in a good way. You know, look at Elon, some of the things that he's doing, employing people, paying taxes, I hope. Although not too much, because just, well, that's another discussion. Maybe I'll have Peter Schiff on, and we'll have that kind of discussion. But I know you're big on, you hinted at it, supply and demand. Basically, so much in life comes down to, why don't I define it as supply and demand within a given market infrastructure?
Yes, and also a lot of people always talk about, oh, well, the supply is so low, it has to go up. That's really not true most of the time, because if there's no demand, you have to have some kind of demand. Now, demand can be created, but the demand has to exceed whatever supply there is. So, for instance, like there might only be 2 or 3 of something, but if nobody wants it, that doesn't mean it's going to be very valuable. But if somebody then, say, maybe has all 3 of them and says, I need to create a demand, and they somehow create a demand via marketing or whatever, then they can make those things very, very valuable.
I mean, it sounds like a random question. Relates to what we spoke about earlier. Is the stock market basically, well, yeah, it is a forward-looking mechanism?
So I think it is in a way, yes. That it because it tries to price everything in, and it's pricing in not the past, but what's going to happen in the future. Because basically, really, in theory, and I know it's in theory, and my short time in school, I think you talk about this a little bit, that all assets should be based on the future value of the present cash flows. Now, yes, that goes against all this, embedded Ponzi stuff, this, that, and the other. But at the end of the day, any real business should have some type of productivity. It's producing some goods or services. It's making everyone's life better, in theory. And the business should be valued on the present values of the future cash flows. And if that business has pricing power, if we have, I want to say, moderate inflation, not like totally out of hand inflation, because if inflation rises too fast, it's going to be really, really, really hard to pass on that cost that's risen to your consumers, and that might hurt a business. But that's another thing too about inflation. So people say all these things, but there's secret inflation. Have you ever? I used to hear about this thing called shrinkflation, where there'd be less of something in your cereal, or the box might stay the same size, but the amount of cereal you got was smaller. I bet you there's all kinds of other hidden shrinkflation that we don't see. And someone was telling me, I have no idea if it's true, that certain goods now, the price rose 25 to 30%, but what you actually get inside the package has shrunk down now to the bite sizes that used to be like the minis.
Yeah, I mean that is so true. I mean, I think you and I were looking at, a lot of the Canadians, and they have a lot of reason to complain. They have terrible government policy and all that. But oh well, let me put my libertarian views a little bit to the side. Like they're showing $100 of groceries got me this. These same groceries got me like whatever, almost 2 times as much a year ago. You look at the housing prices. We have enough problems here in the U.S., but I'm talking now specifically about Canada. Like you have, the government's claiming, whatever, 4.2% inflation. Well, it's more complicated, because it seems like it's very personal to that person. What are they buying? Like eggs from 3 or 4 months ago here in the US was probably 2.5 times the cost of what it was prior for a variety of different factors, whether they're nefarious or not. So I think that's a very misleading comment. Also, usually the wealthier a person is, the more assets, so that's more asset inflation they're going to own that tend to go up greater. Art, professional sports teams, whatever, AI stocks, etc. Those are, wickedly going up if you utilize that as a base for inflation.
Yeah, that's definitely true. There's been a lot of asset inflation, especially since COVID. Like, even though assets have come down some, still from the time COVID started, there has been a lot of asset inflation. And yeah, I think like the whatever they call, I guess, the middle class or whatever gets hit the hardest. I mean, they might have in the United States their 401ks or whatever they're benefiting, but yeah, when the price of goods and services goes up, I think it hurts them the most because they have less assets in theory going up with the inflation. I always find it interesting too, because I always wonder, you see these stories on Google or on any of the different social media, the videos where people are saying, oh my God, this amount of groceries is now X amount. And I do wonder if food inflation really isn't at least 25 to 50%, depending on what you like to buy. But sometimes I wonder, is this cap? Are some of these people posting these videos just for like engagement farming or attention, or whatever? But I do believe there is some. I always say one thing I learned of growing up in the hood is there's an ounce. I always say the ounce of truth in every pound of lies. I think it was some Real G told me the best lies have an element of truth, but I changed it to there's an ounce of truth in every pound of lies.
Well, you do have a bit of a hot take on inflation. Now, yes, of course, energy and supply and demand in a given market infrastructure, we get it. Trust me, I know that's important. But you have a take on wages going up, like whatever, McDonald's workers, because they can't attract people anymore unless they're paying, whatever, $20 and up. That wages going up creates inflation. Now, that's a bit of a hot take. Some are not going to like that. Give a little context to it.
Yeah, people don't like this. So for years, remember how everyone kept talking about inflation? They were printing all this money. And I think it was some between like 2017 and 2018. I might have went on a bunch of podcasts or whatever, did a bunch of interviews or whatever. And I used to say, I don't know what the heck causes inflation. Everyone keeps saying we're having inflation. It can't be money printing because the velocity isn't in the system and prices aren't going up yet. So I asked myself, and I don't know if this is right, but what could cause inflation? And I said, I think wage inflation. And here's why I think that. People's psychology and disciplines. When they get the average guy, when he gets more, or gal, when they get more money in their pocket, they spend more. So this creates more demand. That goes back to supply and demand and market infrastructure for goods and services. And also remember, during COVID, a lot of supply chains restricted supply. Now, there's all kinds of conspiracy theories and arguments whether or not that was on purpose. But let's just say it wasn't. Regardless, in normal times, if there's more demand for any goods and services and it actually outstrips supply, prices are naturally going to rise. So when the average man has more money in his pocket or her pocket, we never want to leave out the gals. Everyone always leaves out the gals. So if the average guy or gal has more money in their pocket, they really don't have most of them, and I know people don't like me saying this, they don't have the discipline to basically invest that money. A lot of them will spend it or try to upgrade their life. So this causes more demand for goods and services, therefore raising prices. And normally, it's actually spent at places like Walmart.
Yes. And by the way, live audience viewing, listening in, feel free to ask questions in the chat feature. Look forward to hopefully getting to some of them. We're probably ballpark about halfway through and still kind of have a lot to get to. So besides, again, you came from nothing, you got, zero from your parents, except for the opportunity. Of course, they just didn't have the resources, but you didn't rely on them for, like not even, I graduate high school, here's $2,000, like nothing. Like you said, you were literally, without exaggeration, picking up pennies and nickels off the ground and being very frugal year after year, decade after decade from a young age. What a lot of the audience doesn't know, but I think some might have texted me, so they did pick up on it. I believe it was 2017. I might be wrong. Correct me. Weren't you nationally ranked? Was it as the number, was it 3 or 4 angel investor in the US?
So I think there's a bunch of different things where people rank people. And I kind of take all that with a grain of salt. But some person, they ranked me. There was one thing that was like the top, I want to say top 50 or something like that, angel investors. And I think I might have been ranked like 22 or something. And I was like, oh man, I wish I would have been ranked one lower, 23, because Michael Jordan was my hero. And then there was these other things during like the ICO boom where people ranked, the investors in ICOs. And I think I might have been 6, but everyone else above me was funds like Andreessen Horowitz. And I was an individual. And then there was some kind of thing, some database that was ranking people. And my name was shown with like all these really big names. But, I take kind of all that with a grain of salt. I never talked to any of those publications. I also used to have a Wikipedia they canceled. It was kind of cool having one, but
You're better off.
It didn't really mean anything. Yeah, because a lot of stuff got put in there was incorrect. And I tried to, and people would see it and say, so this about you. I was like, that's not correct. Where are you getting this? I was like, see, it says it right there in Wikipedia. And I was like, well, I'm telling you, that's not true. And they're like, no, that's wrong. It's right here. I see it right there. They believe that? It said the words out of my mouth.
I'm assuming with the background in the hood, and we've heard great rappers, legendaries, some of them no longer with us, kind of rap and talk about real G's move in silence. Do you find that to be true?
So it was always my experience growing up, yes, that the real G's moved in silence. So the real gangster, the kingpin, no one knew who the heck, very few, I'm sure somebody knew, but very few knew who that was. Because, being in secret, moving in silence, it was less chance of them getting, I guess, if they were a gangster in some way, either murdered or put in jail or whatever it may be. So I find an awful lot these days, some of these people flashing all this wealth, doing this, that, and the other. Because back in the olden days, when I was growing up, like the people in the hood, the drug dealers, it was the lieutenants who were all flashy because they were trying to recruit people, making them want to get into the life, this, that, and the other. And everybody in the neighborhood kind of knew who they were. So I do find that kind of weird. But I do understand now, though, we do have social media. So there is like a social currency value that is a new resource that they didn't have back, when I was a kid. But I do sometimes wonder about a lot of this stuff because, the more, I guess, the older I get or I meet people in life, you do find out the man behind the man syndrome, which is sometimes actually the man behind the man is a woman running things.
Exactly.
That a lot of the real G's still, like in finance, people have never heard of them, like secret trillionaires, maybe even, or even decatrillionaires or centatrillionaires, or maybe even quadrillionaire families or entities behind something.
Now hold on. I can't let you just say that and just have it be a passing comment. Because we're told that, Daddy Elon is the king of ultra high net worth. Now, in reality, those of us in my community know that royal families and others, when the family is combined, absolutely are, trillionaire families. I know it's going to be a shocker to some of you, but collectively, but do you actually think there may be trillionaire families when you add up their secret real estate holdings and everything? Really?
I think there might be a quadrillionaire family or even bigger because just think there was this guy, I think
even I don't know this.
I think his name was something Foger or something like that. I forget. I remember reading a
book. Oh God, yeah, that's what the old German family from like 400 or 500 years ago.
Yeah, and it said he was the richest guy in the history of the world. And there's all these different, if you Google it, if you actually know his name, there's all these different ones that say for inflation. Some say it would be 400 billion. Some say it would be 800. Some say it would be 1 trillion. Forget all that. It says when he died in this book. And remember, this is from the book, so I don't even know if the information is factual. It could have been more or less. It says like 498 years ago, the guy had like a little bit over 2 million. When you try to punch that into like one of those compounding calculators on the internet, or even an actual calculator, when you put in the future value or put it in ChatGPT, you get all these different answers, and you get error, and some of them even say ridiculous
usually
stuff
error when it's that
like
big
$7. Yeah, most of them won't go over 99 years. But even if you do like 12% compounded over 498 years, there's no way it's less than 1 trillion. It can't even be less than like a decatrillion. I would punch in the same calculator, the one that actually seemed to work a little, the same freaking thing, and it kept giving me different numbers, but they were all over 1 trillion. Some of them were like 11 trillion, 15 trillion, but it would only do 99 years. It wouldn't do 498. But again, it did keep making errors and giving different numbers, so we can't trust the accuracy of it. But I think common sense, over 498 years, if you use 12%, or if you cut it in half, it's a lot of money. And I just find it extremely hard to believe because, usually the lineage and the matriarch, they don't let a family like that blow the money. It might get divided amongst some of the different people in the family down the line. But I think there's a lot of real G's moving in silence with at least $1 trillion. So maybe when you add it up, it's the quadrillion. but there might
Yeah,
be
like
some deckers running around in silence, and
I
maybe
got
you
to
want
be
to
a little
send them.
careful what I say about certain European and Asian families. I would look at the patri at the matriarchy. I'm sorry. Look at the culture and history of that passing on. They're absolutely collectively as a family unit are quote unquote trillionaires out there. Again, you hope I would know a little bit from 20 years in this community and being among one of the figures in the family office world. So I do know some things that probably the less I talk about, probably the better. I don't need a knock on the door in a variety of different ways. Let's talk a little bit about the young ones. I like to speak at colleges. I like to do because I want to hear the insights of billionaires, mindsets, and traits and all that. So it's always intriguing. Hopefully, I make that a little colorful. I've done some other programs for rising generations in the family. If I could roll back the clock and you're now 18 years old in today's world in 2023, don't overly think about it. I'm going to ask you an either or question. Would you rather have 5 million legit followers on social media or $5 million?
The legit followers.
You didn't take long to answer that. Why?
Now, when you say legit followers, let's define what that is. 5 million people who actively engage with you. So a lot of people say legit followers where they mean it's not bots or just accounts that, not necessarily bots, but even accounts that signed up and followed you and then just never use the application again or use it once a month. I'm talking about legit active people who actively engage with whatever you post. So obviously, if it's 5 million legit people, they're probably not 5 million going to comment on every one. But let's say 10 to 20% do. That's 500,000 to 1 million commenting on everything you do. Well, that creates a tremendous social currency in the future. And, with great power comes great responsibility. So you really got to be careful what narrative you be pushing out there. But you could push out very positive things like think for yourself, what being a contrarian really is. Hey, this is what's going on in the world. This is a lot of different takes. What's your take? Why is this your take? And don't even try to give them any confirmation bias before you give your take. Let like 500,000 people comment with their different takes. And then a bunch of them will even start arguing with each other. And hopefully some young lad will form their own opinion. And you might even learn something and form a better opinion just by, I hate to say, the groupthink of all these people following you. So now that kind of groupthink is different than the groupthink we get in the media when everybody knows something. Because when everybody knows something in the media or you see an agenda being pushed and we don't know where it came from, I have a feeling the reason it's wrong most of the time, it's intended to be wrong most of the time because the real cheese movement in silence are profiting off of you believing the wrong thing.
It's true.
That's one thing I learned in the hood too.
If you were approached after one of these speeches, say it was you, and it should be you even more than me, by whatever, a young gal. Let's go with a young gal. She's now 21, junior, heading into her senior year, doesn't come from a wealthy family. College burden is now on her. I guess she might as well finish her senior year, 1 year to go, but you may argue otherwise. And she's hungry to be successful. What advice would you give her? You got a couple of minutes to catch a plane. You can't sit down. There's no follow-up. She just wants a little bit of back and forth for a minute or two. What would you tell her?
So the simplest answer is to find what you really love and be the best at it. Because you know how you have all these people that give this, what I call really bad advice. Oh, don't do that. That doesn't make any money. That's not really successful, really. Because when I was a kid growing up, all the kids playing video games were considered losers. That's all they did in their basement or whatever, in their bedroom. And now some of them are making tens of millions of dollars and became real famous. So we don't know in the future what's going to be the big thing. But I always figure, too, if you're the best at whatever you do, you're probably going to make the most at that. And even if it's not a lot of money, even if she's only making there's been a lot of inflation since I was a kid. So maybe like a small amount, $3 or $4 an hour now is more like 20 or 30. But let's say if she even loves something and is only getting paid $20 or $30 an hour. If she basically spends less than she earns, I know they like to call that paying yourself first because I guess that's catchy, paying yourself. And she invests the difference over time, over decades of compounding, she'll be able to do whatever she wants with her life. So it's really find what you love and be the best at it.
And you're a bit of an example of that. I don't think it's me saying things off color. If you want me to shut the hell up, let me know. But again, community college, pretty traditional kind of mid-level type white collar positions. I'm not even sure ever earning quote unquote over $100,000 a year, but being frugal, reading, forming thesis, investing, really targeting your thesis, being concentrated, compounding, you've been able to be not top 1%, but probably top 100th or 1/1000th of 1% without ever, again, I founded a company and I made millions of dollars a year and exited. I worked for a big company and made, $2.7 million a year. Now, yeah, that would be optimal, I guess. Do I want to work smart and hard for decade after decade and save and be frugal and then be very tactical? That is the more logical approach. I know the young ones, what they want now is, F that. They don't want to do that. They want to know how they can make a shit ton of money now, as opposed to learning the discipline. And you're not against that per se, but you feel that's a mistake to really not look beyond the aspect and the power of discipline.
Well, the other avenues, I think a lot of the younger people, so not even now, even years ago, so even decades ago, I remember, I think I was around 27 or 28. And I might have first, allegedly reached 7 figures. And some guy knew I had gotten into stocks and stuff. And he started asking me because he wanted a hot tip. And I said, listen, I never give investment advice, but why don't you just do this? Because he had just started getting a job. He was 18 years old. I said, just out of every one of your paychecks, instead of buying them damn scratch-off tickets, he's buying scratch-off tickets, spending $20, $50 on scratch-off. I said, instead of that, just put that, find either the SPY or a Vanguard S&P 500 index fund or Fidelity, or whoever you want to use, and just put that money in there and never touch it. Even when the market goes down, just put the same amount, no matter what, and just keep doing it. Because he wanted to get to $1 million, which I also tried to tell him, his goal should be a lot bigger. But hey, if that's your goal, not my business to tell you your goal. But he thought that, because he just thought that was a lot of money because everybody told him. I said then over years, decades, with almost certainty, and nothing's almost certain, but over decades, if you do that, it's a very high probability that you will get to that 1 million. I said, now by the time you get there, that 1 million might not be worth anything, but you will get there. And of course, I don't know if he did it or not, but I'm going to pretty much guess he didn't do it, because everybody just wants some hot tip where they can make easy money, because they don't have the discipline, they don't have the psychology to control themselves.
And yeah, that relates to emotional intelligence, regulation of one's emotions. And again, we could do a deep dive into that, but we're not going to have the time. Audience, I promise, we're going to also get to AI and get pretty deep, kind of from the investing and overall big picture macro perspective. But I do want to certainly give a shout out to some of the people that are commenting in, from David F. to Blue to Natasha. Natasha, we're going to get to something of you in a second. To Luke, to Gert. Let's see, working smart and having discipline is a killer combo. Yes, I do hate when people only, it's the young ones. I don't have to work hard. I go to college. I have good IQ. I'm going to work smart. You're not incorrect to a degree. Absolutely. You want to leverage your intelligence and you want to work smart. At the end of the day, being effective is the most important, not necessarily being efficient. But stop it, you young ones. You got to grind it. You got to work hard. And if you really put it in, the time and effort, especially in your 20s, you'll get more of the rewards as you get older. Now, I could go down a very sensitive path of difference between men and women and different challenges they each have in their 20s and 30s and decades that move on. We will tackle uncomfortable subjects like that. I think some of you don't go to my TikTok, have seen my Barbie review. I wouldn't say a review of the movie. It was way more of a commentary. It was meant to be a little tongue-in-cheek, but I was kind of serious about it as well. Certain things that I see from the perspective going on. But yes, work hard and smart. Now, Natasha, I promised I would come back to you. Natasha's writing, hello from sunny Colorado, which reminds me it's college football Saturday. I'm tying all of you up for at least another half hour. JJ's like, come on, Angelo, I gotta get ready. And when I think of Colorado now, I think of some dude named Prime, Dion, the coach, and what's going on there. Do you look at Dion's likely short stay in Colorado and what he's doing, coaching his son and being a little brash and bold? I love the cowboy hat. I should put mine on. I think all of you know when I'm not in a suit and tie, I'm almost always in a cowboy hat, if not a bandana. So I am, and I love the fact that Elon also wore a cowboy hat with his little thing at the border a couple of days ago. You got the show Yellowstone. I'm so happy. Cowboy hats are rocking. They're awesome. Uh, what do you think about Prime? What attracted you to him when you were younger, when he was playing, when you were growing up? And what do you think he's doing to college football, good or bad?
So yeah, and it's funny too because you know how they have like the Fox big noon Saturday. So I thought the game started at noon, but apparently they must mean noon. I don't know where the hell they mean noon because it started 11 o'clock here, even though it's called Fox Noon, and it's 7-0 USC right now, and the first is almost over. So it seems to be a close game.
Colorado has no chance, by the way. I'm an Oklahoma guy, by the way, so I'm a little frustrated that my coach 2 years ago and who is going to be the number one pick in the draft, their quarterback, left. But it is what it is. We ain't doing so bad this year ourselves after a pretty bad year last year. But yeah, especially without arguably their first and second best player in Colorado, having a hard time seeing that Colorado is going to win this. But I'm fascinated by some of the vibe and eyeballs that Prime is bringing to college football that may not have been as interested in the past.
So yeah, a couple of things about Prime. So I was really impressed because back when I was a kid, there were very few players. Well, there still is, but you know, that played two professional sports, baseball, and football. And I think also, I don't know if I was probably a little bit older when this happened, but I think he played for the Braves or something and the Falcons, and he scored a touchdown and a home run the same day. I don't know if anyone else has ever done that, but I remember this guy's really talented. He wasn't a little flashy for my taste, but I said what I like about this guy is his thinking. He seems to have a winner's mentality, and when it's really shown when he came to Colorado, and I believe he went to like Jackson State as a coach first, and he turned them around. They were doing really good and brought some spotlight there. Well, coming here, he's brought a lot of eyes to college football. And you know, people see all the flash, and like that one coach, he did it himself for clicks from, I think, Oregon Ducks said, you know, he's about the clicks or whatever. But this is what I really like about Prime. He's installing discipline in these young men. He comes here and he says, hey, this ain't no BS. If you ain't for this team, leave now. We're going to bring in people who are going to put in the work, who are going to be dedicated. And I don't think any of you guys who were previously here were. But, hey, if you think you were, prove Coach Prime wrong. So I don't know if anybody stayed or not, but if they did. But another thing, too, that I think a lot of people really miss about Coach Prime, I think these kids play above their actual talent level that they have right now because they don't want to disappoint Coach Prime. Imagine having that man as your coach every day coming out there, and he raises these kids' level to a higher standard in the same way that Michael Jordan made all the players on his team around him better. But he could actually do some of the playing to help and get them fired up and cause them momentum. In this case, with a coach, it's even harder because Prime can't go out there on the field anymore and make the interception or, you know, catch a touchdown pass. So to actually do it as a coach by inspiring kids, I really like that about him and raising the level they're playing. So I believe that even though these kids have talent, he's actually bringing out more talent in them.
Yes, and Natasha, I'm not, saying anything bad about Colorado. I'm a fan of Prime. I like what they're doing. I just think that USC is wickedly talented and likely, again, if I were a gambler in sports, and I am a pretty big college football fan, I think USC is no surprise here, especially with an injury to their player, is going to win. But I do like what they're doing. Now, me, myself, again, I'm an Oklahoma guy. I love the state right above you, Wyoming. That's where all my business interests are. I kind of probably try to keep away from there in January, February, and part of March. A little too cold for me. But besides that, although I will do a snowmobile trip this winter through parts of Yellowstone or whatever. So that's going to be a lot of fun. More coming up on that. May make that a little bit of a thing for some of my masterclass participants. David F., I promise, 99% sure I'm going to get to your question. But while we're on the subject of football and social issues, well, I don't know if I quite say that, but indirectly, why don't we switch to the NFL? It made my subtitle, so I have to bring it up. And that would be who? So we're both big NFL guys, fans. We, of course, know who Travis Kelce is, a Super Bowl winning tight end multiple time, Pro Bowl player, really talented, a bit of a colorful persona. But boy, like he really, I guess, did good because he's with someone even way more famous than him, that being Taylor Swift. And not just more famous. I looked it up. It might be off. I think she's worth $750 million, and she's young, what, 32, 33. Travis is, I think, a year or two younger and worth only 30 million. So she's a lot closer to having an SFO, although a little too small by your definition, maybe not by mine. So what do you take of this? Again, both you and I tend to think a little differently. I say this looks really good for business. I would say I showed you something this morning that was a clip on something that the Kansas City Chiefs are now America's team and not the Dallas Cowboys. Is this connection of Swift and Kelce a little too convenient for what's good for the Chiefs and good for the NFL? And I don't know, maybe good for her.
Well, she
Good for
definitely
everyone.
put him on the map, because even though we know who he is, because I like the Chiefs because I'm a Patrick Mahomes fan. So, if he would have changed teams, I would change teams, because I always like to get
You're a bandwagon.
I used to be a Marino fan, and then he retired. Then I was a Peyton fan, and he retired, so I had to jump on the Brady, even though I didn't like Brady when Peyton
I
was
am
around.
totally loyal to the jersey, everyone. Unlike this guy, it's New York Giants all the way, even though we don't look so great this year. Hopefully we'll crush Seattle coming up on Monday. But okay, part of my interruption. Continue.
And then I'm a Mahomes fan, but so I know who Kelce is, obviously, because he likes to throw to him a lot and this, that, and the other. But I think she really put Kelce on the map, and even his brother, because they have some kind of podcast and they talk
Well, yeah,
about it.
he plays
His
on
brother's
the
an incredible player too, by the way. A lot of people never
Of
heard
course,
of him.
of course. Yeah, very good center.
But anyway, so, and it's very, very good for the NFL. I mean, all these people who never talked about the NFL, it's all over these sites like Pop Base and all these sites that most of these people, half of them probably don't know what the hell the NFL is. They might like new professional football, but I would be surprised they didn't even know what the NFL was, believe it or not. And now they know who the NFL is. They know about the Chiefs and the Swifties.
And I'm
probably
just thinking, I mean, about 15% of my audience is international, and I love you guys. I appreciate you. Look forward to a lot of travel. Actually, I might even do a month in Asia in 2024, doing some family office stuff in Singapore and other countries. So it looks to be a lot of fun. Because she is a household brand as an entrepreneur, as a songwriter, as an entertainer, and someone probably the next year or so going to be worth $1 billion, and that's just going to skyrocket. She does have an international presence where people internationally are not going to know who the hell Travis Kelce is. Now, is she just going to be a current crush and like other pretty famous boyfriends that she had? She writes a song about them and throws them under the bus. But even then, that is good for business. So I hate to always think about money, but I have to think the NFL loves this.
Oh, I'm sure they do. And remember reach. Remember how you talked about the 5 million followers, but I said 5 million actual engaging followers. I wouldn't be surprised if she didn't have 5 million people, because I think her follower count is probably way higher than 5 million. I don't know what it is.
Oh God.
But she might. But out of that,
yes, way higher.
She might have 5 million people who actively engage with her stuff. So that's the point I'm making. You might have to have 50 million followers to have 5 million really engaged ones, or maybe 20 million. Some percentage are going to be really like dedicated diehards, like she's got the Swifties. So yeah, she's got some number of people, probably more than 1 million, that are really like dedicated. And what you can't fake is all the people going to her shows. I mean, she's always got all these people going to her shows, and some of them go multiple times. And I think I might even said this to you. I think there's a lot of older people closer, to our ages, and some of them have kids so they use it as an excuse that they brought them to the concert. I think there's a lot of older people that are closet Swiftie fans. Because first of all, a lot of this music is co-written, and she's working with the best producers in the history of music.
True.
The songs are very good. I mean, you could put another artist doing it if they were marketed with a lot of money behind them, they'd be hits also. I mean, she's definitely talented, but she has a really good, powerful team backing her.
Yeah, like this almost appears to be too good for the Chiefs, for the NFL. I find it very intriguing. I tend to look at things a little differently, and I'm not saying it's not a real romance and all that, but boy, the NFL is going to want this to continue. They want the Chiefs to get to the Super Bowl. They want the relationship to continue, or maybe during the Super Bowl week, a breakup. And then that creates all sorts of attention. I don't know. I mean, why am I going down this road? It's only going to get me in trouble. Is this potentially a little bit artificial or kind of a psyop?
I guess it's impossible to know. I mean, let's think. If you're Taylor Swift, there's really not many men at her level of fame. I mean, forget money and all that. Her level of fame. I mean, how many men are even as famous as her? Drake, and he's in music too. But okay, probably some. Maybe you know how like we call it soccer, but they call it football since it's international. Maybe somebody like that Messi guy.
Messi is more famous, yes. And I'm sure
I don't
Gert,
think
you're
he's
from
more
Belgium.
famous
I
than
think
her.
you'll agree with that.
But he might be.
But even Gert's commenting in the screen, Travis who? That's just what I said.
Right.
You may not like Taylor Swift, Gert, but you know who she is. You definitely, I'm assuming, know who Messi is, even if you're not in your country, you would call it football. We call it soccer here in the U.S. We call our NFL American football, quote unquote, football. So yeah, like your comment is perfectly like on tune. But you're basically stating that, boy, this gets to be a little sensitive. I want to be
She's
careful.
an icon. I mean, Michael
Yeah.
Jordan, Messi.
Again, watch my
Oprah.
Barbie TikTok.
Who else can we put up there on Mount Rushmore with there was an icon? There ain't many. So who, no matter who she dates,
she's always going to be more famous and likely wealthier than.
I don't know about wealthier, but definitely more famous.
Well, she's notably wealthier than, Jake Windenhall, than Travis Kelce and some of the others. Now, maybe not when was Jake? Maybe 5-6 years ago. So it's a little hard to say. Now, geez, why the hell am I even bringing this up? But again, I'm interested in evolutionary psychology. I'm interested in dynamics between men and women. These are all things that intrigue me by nature, and it's good for raising children in a stable environment where you could secure resources. By nature, women are going to be hypergamous, meaning they're more likely to want to move up the social ladder. She's at such a high status, as well as, even more important, money, that like none of that really matters. Does that actually free her up to have a level of freedom to engage and interact with who she wants? But is the male in the relationship, even one pretty prominent like Travis Kelce, who's worth 30 million. The average guy is not worth 30 million. The average guy is not 6'6". He's better looking than the average guy. He has some level of status, but it's maybe 3% of hers. Like I don't think she minds. I wonder if it bothers him a little bit internally.
I don't think it bothers him because, who knows what the real story is. But the story we're told is he went to a concert. He wanted to meet her, give her a friendship bracelet. He couldn't get to meet her and go backstage or whatever. And then he puts all this out there between his podcast and the media that he wants to meet her. And then I don't know if Coach Reed is joking, but he's saying, he got them put together and they invited her to a game. She was in the suite with his mom, which we saw. So that did happen. But we don't know how they got together. And she says she liked the fact that, he would pursue her in public like that because you would think a girl like that, forget the money, but just going on the status, the quarterback is usually like, the guy in the limelight of the football game, that it would be a quarterback, somebody like a Jimmy G or something like that. But he's a tight end. But he did take the initiative, if it's true, to pursue her. And he went to the concert for whatever reason. If it's true, he couldn't get to give her the friendship bracelet. It got in the media, and then he kept at it. So, as a woman, she might say, well, how many guys are even have that much, I guess, cojones to keep pursuing me when they've heard nothing back in public? Because wouldn't that be embarrassing for like a manly dude like Travis Kelce to just totally be ghosted with his pursuit of any woman?
Yeah, well, that happened about 5 years ago to Joel Embiid with Rihanna. Now, he wasn't quite the figurehead that he is now in the NBA. Yeah, these are all intriguing questions. I don't mean to make it more complicated with my conversations on evolutionary psychology and is this a psyop and is this great for the NFL? Of course, everything I said is 100% accurate. But besides that, I do want you to at least hopefully watch the second half of the game. But I think, several questions that I think I have to ask you. Maybe we'll go a little round robin till we dive a little deeper into AI. So boom, here we go. Very random. Why is Bill Gates and Sam Altman investing in nuclear power?
Yeah, so I think, I'm not an expert on nuclear or anything, don't know a lot about it, but, it's from what I've read, it's cleaner energy. And also, too, eventually, at some point, they keep saying fossil fuel is going to run out and hasn't yet. At some point, it is going to run out and become scarce because we keep having to have more technologies, which we luckily had with the fracking to go deeper into the ground and get more. And it's also just because you can get more, it has to be usable. So it's getting the more and usable, two things. So at some point, we are going to run out of the resource. And maybe that's not for 100 years, but those guys are big thinkers. They're thinking about legacy, their grandkids, things of that nature. So they're going to make investments in stuff like that, like fusion, because in the future, something's going to break through. Maybe it's nuclear with fusion, maybe it's not. But there has to be some kind of source of it, forget even the clean part of it, some source of energy that powers us, centuries from now. When, let's say, fossil fuels, back to the resources, is even more scarce. And when it gets really, really scarce, the price might get higher and higher unless they put price controls on it. So, decades or centuries from now. So they're thinking about the future.
The part of climate change that is man-made, and I guess I agree that a part of it is, doesn't nuclear power solve a lot of problems? The French appear to have this correct in terms of what they're doing. Let's not do a deep dive into climate change and all that. We'll drive each other crazy. But I'm just saying, nuclear power appears to solve a lot of problems. Maybe why don't we leave it at that? Let me ask you other controversial questions. Will the inevitability of not just central bank digital currencies, but programmable money variation of it, which is likely inevitable so the government could track you and control you, for lack of a better word, give ultimate power to the government? And let's be real, the government, the people in power that pull the strings behind the government. Now, again, we could do 2 hours. We could move this to Rumble where we could openly talk about anything and not get banned. So we're not going to go too deep into this, Mr. Sowers. But is there any way around in the US, maybe forget the rest of the world, sorry, my brethren, is there any way around not having programmable money in central bank digital currencies?
So I would definitely agree. And I used to talk about CBDCs in 2017, 2018, and people would laugh at me like, are you doing a job? What are you talking about? And programmable money. I definitely think it is inevitable, and there are some benefits to it. But no technology is actually good or bad. It's how it's used. And most technology can be used as a tool to enhance lives. The issue I guess we run into usually, ultimately, not always, because you only assist speaking absolutes, but usually, is it gets abused or misused by someone in power or some group of people in power. And that's kind of an issue. Now, I guess you say, is there a way around it? Other technologies could be invented, maybe for privacy protection or this, that, and the other. But at the end of the day, I think it was a child I wrote, the Rothschilds, it might have been said, he who holds the gold makes the rules. So at the end of the day, he who holds whatever is the gold at that time, and maybe it's digital gold, makes the rules. And hopefully, even though everything normally does kind of start out well-meaning, that someone doesn't, I guess, get corrupted by absolute power and it goes the wrong way. Hopefully the technology works for the better, because something like the CBDC actually could tie into when we have universal basic income, because the AI becomes so productive and some people lose their jobs and everyone worries about that, which actually I would argue those jobs that get lost are going to be jobs that people didn't really want. And if they're given the freedom to pursue their true interest and do what they want and love in life, like we talked about that young girl at the airport, that actually could be beneficial. Now, my personal opinion is in the beginning that'll be like a utopia, but then there's always some malcontent who says, yeah, but what about the gazillionaires or the trillionaires that they actually see in Forbes that says they got 100 trillion, and people get envious, because I believe envy is the root of all evil, not money. Then there'll be some malcontents and there could be some kind of uprisings and this, that, and the other. But the technology itself is not bad.
Maybe go a little back and forth with you on that. And maybe I'll be one of those malcontents, which I probably will. Stuck in the mountains of Wyoming, my beard longer and now white. Oh, boy. But what I'm basically stating is, yes, I do believe universal base income eventually is going to happen, at least on some degree. I think central bank digital currencies, they'll be given away 1,000 or 2,000 free. The mass will register for it, no strings attached, get them addicted to it, and then basically start to roll it into the system and take away dollars, quote unquote, in the way that we know it. Again, other podcasts, maybe with JJ and others, will cover this. Would love to have Michael Saylor back on in greater detail, but he'll just want to talk only about Bitcoin, which is fine, but we can still have that discussion. But what I'm basically stating is, depending on the impact of AI on jobs, on inevitably declining populations, on GDP, we're likely eventually going to have some forms of UBI or free housing. Energy costs will likely drop drastically. So the masses, those that are, I'm not going to use the word afraid to go out there and take risk, are going to be covered. God, I'm sounding like the World Economic Forum here. You're going to owe nothing and you're going to be happy. God, that drives me crazy. Listen to aspects of my interview with the legendary Swiss economist living in Asia. I did it a little after JJ, was maybe March of this year. It's on my @Family Office YouTube channel, Mark Faber. You friendly call him Santa Claus because he used to have a longer white beard. I interview him. It's like 12 o'clock his time at night, midnight in like Thailand. He's smoking cigarettes and drinking beer. And I'm like, well, don't tempt me. I take out my cigar and my Woodford Reserve whiskey, bourbon, whatever, and start drinking away. So I did ask Mark to come back on. I don't know if he's a little bit afraid of me, but I'll give him credit. Like, that guy, he answers any question. I love to go back and forth with him. I love how he thinks. And by the way, audience, in case you're wondering, a little bit of an insider type thing, and JJ and I have caught up offline about this with someone pretty prominent yesterday. Like, a lot of people don't want to come on because they don't want to be grilled. They don't want to be asked tough questions. My PR team. Your PR team is a bunch of woke crap, young people who know nothing, that are afraid that you can't deal with my questions that I'm going to throw at you that you're not going to like on geopolitics and economics. Now, no, it's not all my ego. There's truth to what I said. And yeah, my platforms are not that big where, I'm not Tucker Carlson where I got 10 million followers on Twitter where they're going to overlook that. So I do face the challenge of people that either want to have their PR team control the questions 100%, or simply say no. They don't want to face the heat. I'll give you, and I'm pretty nice with you, but I'll give Adam Robinson, Ian Burlingame, Mark Faber, who I noted, Michael Saylor, a billionaire, didn't say, Angelo, I know you're going to ask me tough questions. I want to know what they are. He didn't care. And I asked him uncomfortable questions that got really deep into Bitcoin. He was a cool cat. I respect him. I don't have to agree with everything he says, and Lord knows I don't, but I will give him credit. He wasn't some wimp who had to hide behind his PC correct PR firm. So a lot of the people, they're afraid of the heat that I'm going to bring them asking really, really difficult questions. JJ gets off, of course, only very, very easy, but wait till next time. Okay, I'm going to go back a little bit to almost how he started. It's going to be negative shit. Consumers are running out of money to spend. Consumer credit is through the roof. Defaults are rising. Bankruptcies are rising. We got, at least in my opinion, a de facto recession in Europe. Sorry, Gert. And probably here as well. China is imploding. The level of the super rich there is down 11%, the most of any country in the world from the year prior. And student loan payments, they're just restarting. Commercial real estate's going to hell. Interest rates are rising. Mortgage rates are going crazy. Commercial interest rates are going to be adjusted or come through. We got an election coming up. The side that loses is going to be really, really mad. I think we're quasi in a cold civil war now here in the U.S. But boy, what a great picture I just painted, JJ. Sorry about that. You're getting now you know why people don't want to come on my show and deal with some of this. I don't know if you're the right person to ask to make me feel better relative to what I said, because you're probably going to make me actually feel worse. But why don't I stop there and allow you to openly comment on my broad comment without a specific question?
So, all the things you said that are going on, as far as we know from the media, are true, because I think that basically, what did they say? If it bleeds, it leads. So they like to I guess, push out there these narratives. I often wonder, has the world for the most part always been like this, but we didn't have the social media and the way to spread the message so fast, and then a bunch of people to even amplify the message of gloom and doom? Because people seem, for whatever reason, to like to read and talk about gloom and doom. I often wonder, because there's one thing I did notice growing up in the hood. The second coming of Jesus was always around the corner. The world was always going to end, was always around the corner. World War III was always around the corner. Well, it's been decades later and none of that's happened.
You're going to ruin my disaster prep for billionaire stuff. No, it is around the corner. Be very concerned. And
Now,
again, 20% of the time, all this rhetoric, unfortunately, ends up being correct. Like you said, the broken clock. Some of the things we're talking about are happening now and are inevitable to happen. Maybe we can't totally control the timeline, but there appears to be lots of bad shit happening that's above and beyond the normal. I mean, maybe it's just me.
now, disaster prep for billionaires is different. They need disaster prep because billionaires have more, let's call it, dangers or landmines or hidden pitfalls around the corner, especially if they have young ones, because to make sure the next generation is taken care of, they don't get out of hand.
Family continuity. It's the number one thing among the generational families that are super rich. And by the way, you and your advisors are doing a lousy job of dealing with it. But hopefully that keeps my consulting practice happily in business. Thank you.
Well, do you know what the number one? So, I have met people speaking at different conferences and just, whatever, since like, say, 2016 to 2023, and we're almost over 2023. And you know what? Almost every one of them, if they talk to me for like 5 or 10 minutes, says to me, the number one worry they have is that their kids are going to grow up to be a-holes and they're not going to be someone like me. And I said, what do you mean by like me? And they said, because you think for yourself and you were able to basically grab yourself. They always use the word by the bootstraps. I don't know where they get that, but by the bootstraps and get out of the hood.
That's what us OGs, a little bit older than you, Sowers. That's how we talk. Okay.
and they worry that their kid won't be self-sufficient and resourceful, and that's their biggest concern. So I don't think you got anything to worry about with disaster prep and family continuity. They're always going to have a need.
Yeah, their need, by the way, is not that I need to get an extra 100 basis points in my investing. Please, you got to be kidding me. Now, we could argue keeping their purchasing power decade after decade, money pulling from the family members, distributions, building yachts, taxes, government inflation, so effectively government confiscation. I hear you. Investments are very, very, very important. Almost always kind of a top 3 among the 100+ things that are important to families. But the biggest threat to the family is the family. It's the concern generationally. It's the lack of competency that relates to what I call capacity and capability. And my masterclass does an incredibly deep dive with me and Dream Team about that. A little bit of context: in about 3 more days, up on my angelorobles.com in the masterclass section, I actually give about a 1 hour and 45 minute, what a surprise, long, a 1 hour and 45 minute video. You just have to enter your name and email. And it basically is a pretty darn deep overview primer into my creating and reimagining into a top 1% family office, with a little bit of a glimpse into the disaster prep as well. Now, again, that represents a tiny percentage of what you really get with guest lecturers, with case studies, with interaction live and at the moment with me, effectively over a week. So I can't cover in an hour and 45 minutes. By the way, those that put out master classes, masterclass, 1 hour, half a day, it's a joke. It's garbage. It takes at least 18, 20, 24 hours to have some level of context. That's about 3 to 3.5 days to be truly immersive and be a masterclass. But sorry, let me get off of that. Okay, you made me feel maybe just a pinch better relative to some of those things. I think only 2 more topics, then we'll call it a wrap. Hopefully we could keep it maybe 12, 15 minutes. When I hear sometimes on Wall Street, how many assets do you need to hold? Oh, you just need 2, an equity and a bond fund. Now, we all know that the 60-40 is a Wall Street fabrication. Now, that being said, I'm going to scale back a little bit. Most Americans don't invest. That's terrible. And a 60-40 is absolutely a good first step and better than nothing. So it is serving a purpose in our 401k plans, in IRAs, and people saving money. And comparative to not doing anything, bravo, I am a fan. But especially for those that may be more of the ultra or ultra, or how JJ would define level of family office, it's a little bit more complicated than that. If you could talk a little bit from the perspective of, again, I'm careful with the word diversity because you probably don't get rich by being overly diverse, but you could arguably stay rich by being careful and having a level of diversity. Let's go with the word uncorrelated assets. But truly, is anything when things go to shit really that uncorrelated?
So if you go backwards, yeah, in time of panic, everything goes to one. All correlations. I guess that's called the R squared or correlation coefficient or something like that. But so I've never been a fan of this 60-40. And first of all, depending on someone's age, I mean, I know you're talking about family offices, but people in the live stream might be younger people. If you're a younger person, and when I say younger, under the age of, make it up, 30, why would you even want to be in bonds to begin with? I mean, what if, and who knows, nobody knows, but what if interest rates do keep rising? Because the par value of the bonds is the inverse relationship to the interest rate, or the yield. As the interest rate goes up, the par value of the bonds goes lower, and vice versa. But if you're a young person, you have decades and decades and decades. Why wouldn't you want to be in like a low-cost index fund or something of that nature to compound over time? Now, sure, if you pick the right stock that becomes a big winner, you're going to well outperform. But the probability is, I think there's a slight edge over the years. The S&P has been higher. It's a very slight edge. But that slight edge over decades adds up on probabilities. So I always think about probabilities, risk and reward versus probabilities. And yes, if you're a big family office, you should have some allocation to fixed income for sure, and especially now that interest rates are in the 4 to 5% range. Yeah, maybe you should have 10 million in some bonds just to have that income for a shorter and maybe even laddered duration as a small part of your portfolio. But remember how we talked about the insidious savage inflation? If we ever got hyperinflation, you're definitely going to need to be in something that doesn't get totally destroyed. Because if we have hyperinflation, bonds are going to get wrecked. The purchasing power is going to be almost potentially worthless in a hyperinflation situation. But I've never been a big believer of the 60-40. I think somebody made that up. It sounds good. It was marketed very well. And probably people added a lot of fees too, by the way.
Yeah, what a surprise. I'm going to get to a couple of audience questions because I promised, and we'll wrap up with some investment, thesis, or so to speak, and commentary on OpenAI in broadly AI. So I promise within 2 or 3 minutes that's coming. Let's see. David F. asks, what do you think, I guess you, JJ, what do you think about covered call ETFs? And he mentions two, I think it's JEPI and Yield Max funds. Any specific opinion?
I think I've heard of that J one before. Somebody talked about it on CNBC, one of the pundits. So the one thing about covered calls is it caps your upside. And you could do the strategy yourself in theory. I mean, you could buy, it has to be a minimum of 100 shares, I guess, on like the SPY and sell calls against it. You could even do a collar depending on, your relationship with your brokerage account, or you sell calls and puts so you collect double the income. So it sounds like he's trying to collect income and he's trying to cap the downside. So they could have their place. And, obviously I'm not a financial advisor. I don't know his financial situation, so it's hard to say. So that's just like a generic opinion on what they do and how they work. I would say, though, for like really big family offices, I'm not really a real big fan of it. But if you have like a financial advisor or some money manager is managing a portfolio for you and they have that in there, I don't necessarily see anything wrong with it. So I would definitely say I'm neutral. That may not be my personal strategy to be involved in those. If I was going to do it, I'd probably run my own where I sell calls and puts, and I'd actually collar for twice the yield. And that would accomplish two things. First of all, it gives me some downside protection, and I actually hope the calls and puts expire worthless, so I'm keeping both. But if the S&P were actually to dip more, it forces me to buy at a lower price and at a discount because I have the income from the puts and even the calls.
Very true. Some of the questions coming in are commentaries when we spoke about central bank digital currency. He mentions, meaning Gert, delicate situation. It's a reaction to crypto that they can't control. Well, Me and JJ will do something deeper on this, Kurt. Your comment is not necessarily 100% correct. I don't always mean to be nefarious and that there's people behind the people behind the people, but that may not be 100% correct. I'm hopeful for Bitcoin, but even listen to the questions that I asked Michael Saylor. Was the NSA involved in the creation of quote unquote Bitcoin? One of the players, there's some nefarious things that have happened to some of the people we believe were quote unquote among the founders. And there are things that JJ, way more competent than me, could get into that you would probably not want to hear. And that's Bitcoin, which probably is going to be the safest from what you describe. But the other ones like Solana and some of the others, I think it gets a little more complicated. But I hear you. You're not incorrect to be broadly on the right track. Listen to some of my older interviews on At Family Office with JJ, with Michael Saylor, and then stay tuned this fall and winter for newer stuff. I've done relatively, I'll admit, very, very little on crypto over the last year or so. We'll pick that up a little bit more moving forward. And in the family office world, brother, I'm it. Like, you're not hearing anyone else with any sort of fluidity, knowledge, and hands-on experience like me and my Rolodex that is talking about it. And this goes to a bigger issue that I mentioned to many of you, and I don't mean to make it sound like I'm tooting my own horn. I have blind spots up the wazoo, and I let problems and situations get in my way, and I made many of them, and I hope to be a better person moving forward. But I do cover things in the family office world that others don't. I hopefully cover it with a level of intellectual capacity and rigor, both myself, putting my money where my mouth is, and bringing interesting guests on, like uniquely, like JJ today, and not doing a light 20-minute interview then saying goodbye, but doing a deep, multi-hour interview where we're talking about some pretty serious stuff. So yes, I get myself in trouble. I don't know if I want to say the bad boy of the industry. What did I say that someone called me a couple of days ago? Like, they meant it as an insult, but I was like, oh, like thank you. They basically said you're the family office version of Tucker Carlson meets looking like Dan Bilzerian. I'm like, and they trust me, they did not mean either of them in a positive light. And I'm like, well, like, thank you. Like, I actually take that as being a tremendous compliment. Not that I'm perfectly on board with either gentleman. I think they're intriguing. I like some or much of what they do, but of course do not agree 100% with either of them. I have my own perspectives. I think for myself and I make my own decisions, but I do push the boundaries, hopefully from an intellectual perspective. And I hope at least some of you appreciate that. So, go to angelorobles.com, go to my social media, sign up, participate. If you really want to be immersed, join my master classes, engage with me in consulting. And then those are things, I could take you from 0 to 100 or 50 to 200 plus miles an hour race car level driver, I think pretty quickly. And I could learn from you as well, be mutually beneficial. Let's see. Will the digital dollar kill debt ceiling in Congress, Mr. Sowers?
Yeah, so I guess nobody knows because because they have to do the debt ceiling when they I guess because of some kind of mandated laws or who knows what. It seems like the debt ceiling happens every freaking year too. I don't know how often it is. Probably not really every year. It's kind of annoying too because they always keep kicking down the can down the road. I feel like all of that's illusionary, that there isn't really a debt ceiling because as long as we're the reserve currency and can raise money by issuing bonds in our own currency, very important, own currency. So as far as I know, I cannot find a country who's been able to basically borrow in their own currency that has experienced the hyperinflation. So since we're the reserve currency and can borrow in our own currency, I think that the debt ceiling is kind of a dog and pony show and illusionary because that they keep saying, oh, we're not raising it this time. Well, they end up raising it every freaking time. So with the digital dollar, I don't know if it makes any difference. Now, I do wonder, though, what if we do have some kind of, so my theory is it could be totally wrong. But if we go off reserve currency status of US dollar, we're the best house in the bad neighborhood. Or I think one day I was being funny and I said the cleanest shirt in the laundry basket. And So I think we'll go to a dual currency status first. And it might be like a digital type dollar that's backed by either other currencies or even a basket of commodities. So maybe in that way, a digital dollar could change how it's basically done. But we don't really know because, all these things have so many unintended consequences.
Yeah, I mean, it's complicated. Again, we were a unipolar world, I guess you could argue, since Bretton Woods with the US dollar. Times are changing. Look at China, look at BRICS, look at the rise. We've been talking about it forever, but eventually they'll get there with India. Look at what's going on with Russia. Look at Russia teaming up more and more with China. That could be a big problem. And look at what really now it's the BRICS is like 11 as other countries are coming on board, as the opportunities in oil and energy and how that interplays with BRICS, how, like JJ said, with partially, arguably one day being backed by commodities, I think we have a bit of a problem. Or if nothing else, we have to share in the sandbox. I guess I'll put it that way. And mitigating and hedging those risks, especially since as an American and even a European citizen, I bet you 90% of your resources are somewhat tied into the US dollar. And as an American citizen, it's probably 99%. And ways to hedge and mitigate that risk, which are not easy, probably only for the super rich. I get it. And even then, they get kind of complicated. Okay, I think one more question before I get to some.
I had a funny thought about that guy's question, though, or gal's question.
Sure.
Is that instead of the argument being, are we going to raise the debt ceiling? If the digital dollar's back, it'll be something like, are we going to buy more of the commodities in the basket in order to issue more? So it'll become a different discussion.
Interesting. One question coming in, I believe one of our European folk, what's the safe haven investment in these challenging times ahead? Maybe that ahead is the key point. I mean, come on, you got to be like Peter Schiff and others. You got to say gold. It's only gold, which, by the way, probably is potentially one of them. I get it, but I don't know if there's any quote unquote just one. From me, my disaster prep for billionaires and all that. And there is no one perfect answer. Owning multiple global businesses with varying interests, arguably in farming and in productivity globally, having diversity of literal currency away from the US dollar. I can maybe argue art, I could argue gold, I could argue Bitcoin. Those are all things that to some degree may play in to diversify. And even then, if a lot of things are going to go down and liquidity is going to dry up, it may get really bad. I hate to chime in my 40-second answer, but there you go. JJ, that one's yours now. Go for it.
Yeah, I mean, I guess now we have to get into what the heck is truly a safe haven, because you could ask 100 different people and get 100 different answers, and probably 97 of them will be people trying to sell you what they're telling you is a safe haven. So my answer is nobody truly knows, because in the time of crisis, nobody knows what the safe haven is going to be. And throughout history, it's been different things. I believe on like the unfortunate incident of 9/11 that the Swiss franc rose a lot on that day. And maybe I don't know if gold did or didn't. I don't remember, but I think in different times there have been different things. And I think it's almost impossible to predict, unless you know that some big institution is hitting the buy button as it's happening, what that's going to be. And I think there's a lot of people out there trying to sell you stuff that are going to tell you it's this, that, and the other. But I don't think anybody really knows for sure. I mean, people might have an opinion or an honest thesis, but nobody really knows for sure. Anyone who says they know for sure is either lying to themselves or lying to you.
And we'll end with a couple of quick-hitting AI questions. OpenAI, behind ChatGPT, is looking for ways to capitalize. Well, of course, they helped to create it on the AI boom. They are seeking market valuation of what they're doing of $90 billion. Let that set in for a second. 90 billion on what? Revenues just expecting to reach 1 billion this year. Where are they getting that market valuation from? And actually, in a weird way, does it kind of make sense?
Well, I guess if somebody's willing to invest at that number, then that's their valuation. Because, if someone's willing to invest, there's another company called Character AI. I think that said they were going to raise it like 10 billion, and now they're seeking money at 4 to 5 billion. And a friend of mine actually told me in Europe there's a bunch of VCs that are interested in investing in these type of things, but they're actually trying to liquidate on the secondary market some of their other investments so they have more liquidity. So I guess they can take bigger positions or whatever. And they're having a hard time, and there's these big discounts and this, that, and the other for some of their portfolios, which aren't AI. So who knows if it's justified? I mean, if somebody's willing to pay it, it's just like there's a valuation. Someone invests in the next round. You hope it gets invested higher, and it keeps going higher and higher until you get the IPO. And sometimes there's down rounds, especially these days with interest rates raising, because liquidity is the main thing. And as interest rates rise, it seems like money isn't as easy, isn't as liquid. So who knows if it's justified, but this is what I always say. It depends on someone's situation. So if you're a really big family office, so you've heard me talk about the 70-20-10. If somebody wants to have part of their 10% other bets in these open AIs and anthropology and all these different things, and even some of the nuclear things and of these call them moonshot bets or whatever. And I'm not saying it's something like OpenAI is a moonshot bet, because eventually we're going to hit AGI or some type of really intelligent AI, and they're making a lot of progress really fast, it seems. And I kind of feel like these things kind of go like this, and then all of a sudden,
Yeah, like a hockey stick.
We might hit it all of a sudden with a lot of these things. And if OpenAI is the winner, then yeah, it probably was a good bet. But how do we know they're going to be a winner? Because I think when I was a kid, they had things like Netscape that went public, and there might have been winners for a certain period of time if you escaped. And that's another thing too. It doesn't necessarily have to win. It's if the people who paid 90 billion valuation after dilution on the IPO escape with a profit before, if valuations were inflated, the bubble burst. So it really depends. If you want it to be part of your 10% as a big family or whatever, and your other bets, I could definitely get with that. I kind of asked myself though, remember how we learned about opportunity costs and they didn't really teach it well? Is there a better opportunity that's more liquid that you could get the same kind of multiple return over whatever your time frame is versus that particular thing like an OpenAI? So even in the public markets, if you think you can get, if you think OpenAI is going to be $1 trillion, and maybe it is, maybe it's not, I have no idea. But let's just say you think it is in the next 5 years. Now, I would ask myself, in the next 5 years, is there an investment that's more liquid that I can buy right now that the probability in my mind, or whatever analysis or thesis they have, gets that 10x better with less risk because of the liquidity? You might even argue, and this is not a recommendation, that something, even though it's a bigger size, if Alphabet wins, they've had a big correction in their stock, they might be undervalued.
Actually, you also do remind me, a little bit of my disclaimer moment, everyone. These are simply me and JJ Sowers having a discussion. It's meant for entertainment purposes. We are not prognosticators. This is not financial or tax advice. And everyone's situation is different. Your liquidity needs, your time horizon, your capital, your dry powder, your goals. There's so many different factors. We simply just have an opinion and like to entertain. And as new information comes in, like a good poker player, our opinion on this last day in September may be different tomorrow, next week. You may hear this 3 years from now, where much of it is just not relevant anymore. A lot of things changed. So understand the moment when we're talking about it in September of 2023. Understand it's simply opinion. JJ and I are wrong, our fair share. And by the way, whenever you invest or do something, it is possible. What did I say? That in time, everything goes to zero. It's impossible. It's possible. I said possible. You could lose all your money. So again, at the end of the day, think for yourself. Staying on a bit of the AI theme. Meanwhile, NVIDIA makes AI-friendly semiconductors. And did they have a great year. And they look to be the dominant force in the market. However, it trades for 100 times earnings and more than 32 times sales. I'm sorry. It's been almost 2 hours. It starts to soak in after a while. That seems to be absurdly high valuations. But again, I wonder, is it? Or has how the world works is different, and I can't go by what I learned 30 or 40 years ago in school.
Okay, so it's about, I think, without looking, that NVIDIA is $1 trillion market cap now. Now, I do wonder, though, so OpenAI is losing money, as far as I know, because someone was pitching a secondary investment at $30 billion a few months ago, and they said they were losing money. What is the sales multiple on OpenAI at 90 billion? Is it 100 or is it more or less? And then we have to think about too. Remember, I think we might have had this conversation on your podcast. I never understood all these people who talk about value investing, what a value stock actually is. I know what they mean. They think they're buying at this price and it's going to be more valuable in the future. But isn't everybody buying a stock at this price or investment because they think it's going to be more valuable in the future? Therefore, I don't really know what the hell a value investment is. So basically, I always think about these things. Yeah, that seems high when you first say it. But relative to whatever your thesis or anyone listening's thesis or anyone invested in NVIDIA's thesis is on its price now relative to, some people say that, the discount value of the future cash flows in the future, if you listen to the textbooks. I don't necessarily buy that 100%, but I get what they're saying, is relative to where NVIDIA is today. Whatever their investment time horizon is, do they think it's going to be worth more, and how much more versus the opportunity cost? Because NVIDIA is pretty liquid right now, so I'm not going to throw that in there. Other investments, do they think the probability of NVIDIA with the same risk outperforming another investment, should they do that? And you could even bring up, should I buy NVIDIA versus OpenAI if you're a big family office? I don't know. Should you? That depends on your thesis, your time frame, and what you're trying to do.
I mean, diving into a little bit of risk again in market share and all that and trying to loop it into AI, like we all read this in the Wall Street Journal and various publications, whatever, Bloomberg, etc. So quote unquote, everyone knows about it. And the market this year, especially AI, is absolutely apparently not terrified of it. So in some ways, is it baked in, and why should we care? I guess I kind of go back to how the world works. Is it different, or is it going to rhyme and repeat itself in patterns that we've seen for a long time?
Yeah, so nobody really knows. I mean, maybe if you work at NVIDIA or you're like the CEO of NVIDIA, you might have a different thesis, or you might actually know something's coming. But I do wonder, though, how we have Moore's Law? What if there's something that we don't have a name for yet that's like Moore's Law, that how the chips keep getting smaller and smaller and the power and all that crap? What if that there's something to do where there's a breakthrough in chips and with AI, where there's a new kind of law that's extremely exponential, that provides so much value and makes robots more productive, makes computing more productive, and dare I say it, machine-human interface, where one day they connect us to the machines and make us all like Tony Stark of Iron Man. Then a company like NVIDIA over decades, and this isn't my thesis, but it could be undervalued. Now, as of today, yeah, it seems $1 trillion. Oh my God, 100 times earnings. Oh my God. But based on the future prospects of what it's going to be, is it? I don't know. I mean, if we have in the next bubble, which, we said the dollar bubble has never burst. What if there's another leg inside the bubble where stocks and cryptocurrencies and things like that? Let's just make up a scenario where the Fed not only pauses, but lowers interest rates again back to zero. Now, this isn't necessarily my thesis anymore because I got stuck in the confirmation bias over that kind of thesis. But what if that was to happen? And what if we start having companies like NVIDIA be $100 trillion companies? Just something crazy. Well, and that would probably be the end of the mother of all bubbles, where people would think it was the new day and all this other crazy stuff. But something like that isn't out of the question. So it really depends on someone's thesis. What do they think the probability of NVIDIA going 100x from here in, like, say, a 6 to 7 year time frame in a mega bubble before it burst? I mean, that's not impossible. I'm not going to say that's not going to happen, even though I'm not actually predicting that's going to happen. Because nobody knows.
I hear you. Great stuff. I always appreciate you. It is a Saturday afternoon, both of our times, whether you're Central and I'm Eastern. I think it's time for me to take off my suit and tie, relax. It's terrible weather out, so I can't do some things I would like to do. Watch a little college football, maybe a nice cigar, and that Woodford Reserve whiskey actually is sounding pretty good about now with a nice lunch. So I think my day is about done. I appreciate you so much. And again, normally I would have a guest on and I would say, well, how could people sign up to your newsletter, or suppose they want to reach out to you? I kind of know the answer to that already. I'll kind of say it on your behalf. Don't. Mr. Sowers just really isn't specifically interested. That doesn't mean he's not a nice guy. That doesn't mean that you're not smart and he wouldn't have something to learn. He's just busy. And again, he has nothing. Unless something changed, JJ, Nothing to offer. Like not even a newsletter, correct?
Yeah, not a newsletter or anything, but you know that song I was playing in the beginning? They can listen to that on Spotify. They can go to Spotify and listen to all my
Yeah,
music.
his music. That's what he has to offer you, which is really cool, by the way. He's very creative, plays piano, sings, plays guitar, and more importantly, writes music and has received royalty checks. I'm not saying they're huge. So let's not talk about the size of them, but royalty checks for many years. Uh, there was a prior episode where I interviewed you, actually getting a little serious for a second, and you noted that when you were young, maybe it might have been 12 or 13, and you were interested in a musical career, you wanted a level of parental and mentorship and fostering belief in yourself. And instead, you're not going to make money doing this. Under 1% of people make real money. And they were not theoretically incorrect in the grand scheme of things. But why do you want to stifle? That's a great word, actually. Stifle your mind, your dreams, your passions. Maybe at 25 they could tell you that, but I don't think they should be telling you that at that age. That's not good.
Especially when a kid is writing those songs when they're like, like the song you heard. I wrote all those songs when I was like between 12 years old and basically 18, 19 years old. Now, more recently, I have written some songs and I'm older, but only a small handful. And I did perform at the Apollo Theater, by the way, which, they used to have Showtime at the Apollo, which is kind of like American Idol now, but it was more rap and R&B. And I did have a song on the radio when I was a teenager, and they were still saying all that shit.
Yeah, that's, now we're laughing a little bit at it because you obviously have done very, very well. So, everyone's proud of you. And a couple of days ago when I was catching up with JJ and I was more relaxed in my t-shirt, and I'm a notch or two older than JJ, but he was on this little kick about playing some riffs from like 80s hairband music, which would be, I would still define me as probably more of a late 70s kind of guy, Led Zeppelin, Pink Floyd. But I definitely enjoyed the hair bands. Mainly they were LA quote unquote centric bands. And we were rattling off a whole bunch of catchy tunes that were played. And then eventually, grunge music would come into play. And I'm pretty diverse in my musical taste, from Southern rock to country music, a little more old school, kind of quasi outlaw type country, to rock and roll, to glam hair bands. I actually did like grunge as well. I actually do like rap, hip hop. I like a little more old school, more late 80s into 90s. But I think it's good that we don't get caught up in how things used to be. We have to always keep on moving forward as well while being respectful of the past. But I wouldn't quite say forcing yourself to listen to more modern music. But I think it is good that you're culturally aware and that you expand your mind a little bit. I see too many people in my age, they're strictly stuck saying classic rock from the 70s, which I get it. I love Pink Floyd and Led Zeppelin and Ted Nugent and all those guys, and of course the ladies as well. But I think it's good to have a sense of diversity. But it was great to riff out some of those old glam metal bands from back in the day. And I think we kind of wrapped up with one that was one of the latter of the bands, Sebastian Bach. Remember that dude? And his band again was...
Oh, that guy, Skid Row, he had an
I
incredible...
love Skid Row. It was a little window and they were kind of good, but damn, they really nailed it there. So for those of you that go back to kind of that 89 through maybe 91, 92 era, yeah, that was on MTV. I remember, I could still envision the video playing. Like it was like... So you brought back some memories there when you played that, a little bit of Poison, a little bit of Guns N' Roses. God damn. Now I may have to, is Rock of Ages still around? I saw it in Vegas about maybe 12, 13 years ago. I want to go see it again. I'll even watch the movie. Oh, well.
I don't know, but I will make one fun prediction that Olivia Rodrigo is the next Taylor Swift. I've been running around saying that. People have been making fun of me, but I'm going to keep saying it. Because she has an excellent producers behind her, an excellent record label, and she just seems to have all the elements.
Yeah, she's a psyop. Now I'm saying that a little bit tongue in cheek, everyone. Don't get so caught up. But yeah, there's a grain of truth to what I'm saying. But you know what? there's star makers effectively behind everyone. And there are some reasons why some people do rise to the top. Do you ever think about that? Do you ever think about how many talented people there are that we never heard of? And they're more talented per se than often people that become stars. Is it luck and timing and being in the right place? Sure. Is it grit and determination? Of course, of course. But are there sometimes other factors that play in behind it relative to a message that people want us to hear? I think you'd be foolish if you didn't realize and wake up to the realities of the world. And who else in the family office world is going to say that? No one. Because they're going to be very vanilla, very bland, very boring, very safe, not push any boundaries, not be intellectually stimulating, not put critical thinking with creative thinking. But there are some exceptions, trust me. And it does make me feel good around the world. I'm not the only one, but I'm out there. So everyone, I'm Angelo Robles. You can all find me at angelorobles.com. You all know about that I have Family Office TV, Family Office Masterclass. A lot of that you can learn about from angelorobles.com. Follow both of my YouTubes, Family Office TV and at Family Office. Different content to some degree on each. I'm active on all platforms. And just simply reach out, engage, tell friends. And again, JJ really has nothing to offer, or I would kick it off to him. I think the most thing that he kind of went a little commercial on, I mean that in a good way, is be familiar with his music as well. But as brilliant as he is, and even you got just like a 1% glimpse today. Nope, no fund, no newsletter, no nothing like that. And again, everyone at the end of the day, make your own decisions and think for yourself. JJ, any parting comments?
No, but don't buy the physical CD at FYE or any of those places because I don't get paid on that. Yeah,
so then, how could they do? Like, how would they go about
buy it off of iTunes or Spotify, do not buy the physical CD. I don't get paid off of that anymore.
Exactly. And again, this is a guy, even at his stage now, that still bends down and picks pennies up off the ground. And that is why he is who he is. Don't be, too big to do that. It all matters, and it all presents itself as a form of discipline. And that's arguably among the number one traits for you, no matter at what level your IQ or any of that, to have a plan, to be disciplined, to be humble, to listen to others, but to focus on making your own decisions and then follow through, execute with what you're going to say. Execution of anything is very, very important. If you have a good plan, but you poorly execute, comparative to your plan's kind of bad, but you execute starts with an F, you know what the word is, out of it, you are way better off in the latter, way better off. Okay, enough of philosophies and poetry and pontifications from Angelo and JJ. I promise JJ will be back. This was a lot of fun. Again, reach out, look forward to connecting. Everyone have a great weekend. Thank you.